Good morning. This is the Eye of the Storm podcast with the Elliott Wave weekly update for gold, silver, and platinum, being recorded on Sunday, January the 11th at 10:52 a.m. Pacific Standard Time. I'm going to start with the gold futures as I normally do, but before I have done a little bit of research into China. And looking at their strategic accumulations, their buildup of rare earth minerals, which is a whole nother subject, but what basically they've been doing within gold, silver, and platinum. Now, in silver, particularly, is why I actually took this step and to go over and take a look at what's kind of going on, maybe behind the scenes of what we see in our own markets. And that came about because the Shanghai exchange, which has trade silver, has consistently now been going at about a $67 premium over what's trading here in the United States. And of course, they don't have uh, the CME raising the margin requirements on the precious metals, gold, silver, and platinum, and palladium, um, as we do here. Now, I will talk about that in silver, but I want to give this overview on all three, gold, silver, and platinum, because that's what I cover in this particular update. And so what I kind of want to talk about is their current investment. And so what we have is that as of late 2025, China's gold holdings exceed 2,299 tons, according to their official data. And analysts suspect that the actual holdings could be materially higher, so potentially greater than 5,000 tons, if any of the hidden stockpiles are included. So China's central bank has been adding to its gold reserves regularly, including a continuous increase over the recent months and years, and that's reflecting a strategic diversification away from US dollar reserves and toward a hard asset. Now, remember, I've discussed also that I believe part of China's economic plan is to dethrone the US dollar as the international currency of trade. So, with that in mind, this all kind of backs some of that up. So, China right now is also the world's largest gold consumer. So, retail and investment plus jewelry, etc. So, the price dynamics, excuse me, often reflect strong Chinese demand. And that's especially during a bull market, which of course we're in right now. So to kind of just sum up what gold is China's primary precious metal investment at a national level. And the official holdings are in the thousands of tons and growing and getting larger. And and there is pretty good evidence that this trend is persistent and it is policy driven. So, in other words, the ruling party, Xi Jinping's party, that's part of their strategic policy. So now silver, again, as we deal with China. Now, again, the Shanghai exchanges has had silver price at a strong premium over the US markets. So here's the deal. China does not officially publish any official silver reserves in that same transparent way that they do in gold. So we don't really have any credible reported figures on what the Chinese central bank has in silver reserves. So, we kind of then go on the basis that anything that we talk about is that it's China is strategically stockpiling silver, or if they are, it remains more from an economic theory than a confirmed data. Okay. So, but China is also the largest global consumer of silver due to its industrial usage. So China uses far more silver in the industry than most other large economies. So the domestic demand for silver, the bars, the coins, has been also on the rise, and particularly as prices surge as investors seek hedges in these precious metals. So it's a little unclear how much this translates into a centralized stockpiling. So what can we say about silver in summary? There's no official reserve data as we can find in gold. And we know that China is a huge industrial consumer and therefore likely holds significant physical silver. Physical, but at least part of it is in the industry and not in reserves. So to say, as I've heard some, and I've read that some are saying, that officially the strategic accumulation by China in silver being for monetary or sovereign reserve purposes is totally unconfirmed. So we don't really have anything. We can speculate, and that is being done. But do we have anything concrete to stand on? Like we know that in gold, they're putting that in. They're doing it. That's for monetary. So the last one is platinum, which I come to realize that China has been a major player in our futures market. So China's imports are significant. They import significant amounts of platinum. So most of the time, that could be beyond their immediate industrial needs. So effectively, they're building physical stocks inside China. So platinum, but through China, is being seen as both an industrial metal, so in the automotive, hydrogen fuel cells, and also as an investment asset. So the bars, the coins, that's in China as a country, not just the government, not just the agencies, but the citizens. So China has become a dominant global player and for platinum bars and coin as an investment. And so they're already capturing a large share of the total investment demand. So again, unlike gold, China does not report any central bank platinum reserves. Although it is spoken, and this is another thing that I've heard and I've read, that China is keeping reserves for currency to back currency. So it's just not there. It's not being reported. It's not being confirmed by the government. So the rising market and investment demand is domestic. So that we can say platinum has a rising market investment demand domestically in China. So the significant imports suggest that they're stockpiling it beyond the industrial usage. So, but there's no transparency here. So official reported reserves holding, excuse me, so there are no official transparent reporting of reserves holdings by the central bank. So here we can take away that China's gold accumulation is strategic. It's clearly documented. It's rising steadily, possibly significantly understated. And it does reflect a policy goal around reserve diversification and currency security. Now, this much we know. Just like is the United States building up its own gold reserves to back the dollar? Don't know. So silver holdings are significant, but they're opaque. In other words, we can't really see what they're doing with it. We know that they're a major holder, but that's largely via their industry and not officially in the reserves. And platinum, same. We can see that it is the demand and the implied accumulation. It is growing, and it is driven by industrial demand and investment flows. So I think that's like their industry, right? Electric vehicles, solar panels, a lot of different things that platinum is used in is part of that investment flows. So you stockpile it and you get ready because you have to go for future. So, but officially the data, it's not there. It's not available. So knowing that, now we're going to turn back to what we're seeing here in the United States. Again, I know it's at least three times. I think they may have done it again where the Federal Reserve, not the Federal Reserve, the Chicago Mercantile Exchange has raised the uh, margin requirements in gold and silver and platinum, and I believe also palladium. Um, and that each time that happens, we see portfolio adjustments. We saw it immediately after they did the first one, and then the second one all came right into back. We saw, excuse me, we saw all of the precious metals just take a nosedive and then recover, and then take another nosedive, and then recover again. So we see every time that these adjustments are made, and but they go right back in, and they start they're buying it again. Now, funds, individuals, there's a lot of participation in gold. And everything still fits within the current Elliott wave patterns. So I'm going to start here with gold, and that I still feel that gold is still within the realm of reality in terms of putting in a primary third wave up. That's what we're involved in right now. And so right here, so we can see that I have an ABC, and now we're doing primary degree, 5 waves up. And so what that does suggest is that with inside this third wave, we're going to get 5 waves of intermediate degree, of which we have one, two, and this is where I think we're close. I think we're close to finishing intermediate wave 3. So I'm going to come down right out of that, and I'm going to bring it down to this level. So within intermediate wave 3, it's going to consist of 5 waves of minor degree, of which 1, 2, 3, and 4 I have as complete. So we're in minor wave 5 going up, and minor wave 5 will consist of 5 waves of minute degree, of which 1, 2, 3, and 4 are complete. And within inside minute wave 5, we're going to have 5 waves of minuet degree, of which 1, 2, 3, and 4 are complete. Now, inside minuet wave 5, we're going to have 5 waves of subminuet degree, of which I believe 1, 2, 3, and 4 are complete. So this is where we're at. Now, I'm going to continue to break this down. I'm going to bring it all the way down to the daily. That takes us inside minute wave 5. It takes us inside minuet wave 5. And here we are kind of trying to figure out what is all of this and what's happening. And this is what has kept me not necessarily sidelined, but continuing to believe is like, well, maybe this is still 3, and this is A of the 4, and because see, that's 3. So that's why I thought, okay, I got A, a B, and I'm looking for a C wave. We didn't, it stopped, and we started to rally. Then we got the margin requirement boost, and we got that decline, and that came down. So I've taken a step back and realized, okay, what do we got going on? If I had to count this as 3 up, what could this 5th wave be? A diagonal. And very, very fitting, right? Because what are we really finishing up? An intermediate third wave. So what are we really, what's all this kind of telling us? Go backing out to here. Well, actually, I have to go all the way back out. Excuse me, I have to go all the way out here. We're finishing the third wave, which actually began in 2015. And it began off the low at, let me just make sure I got the right ticket. Yep. It began off the low at 1,015, I want to say. I think I had 15, maybe. What? So it's in there. But below 1,100 is where this began. So, and just following some guidelines that have kind of developed over the years, particularly in the precious metals, it's within the 5th waves that the market accelerates, the market expands, whether up or down. That would be the longest and the strongest wave. Is often it's going to come within the fifth wave instead of the third, as we know in many of the other markets. So that fits beautifully here. Here is that minor fifth wave, dynamic, parabolic in nature. That's the monthly chart. So that began minor wave five of intermediate wave three, began off of the low in November of 2022. Again, right, the 2022 low at 1618. And boy, has it been dynamic because we're back above 4,500. Again, it's been extremely dynamic. So I'm going to come down here and actually I'm going to go back to that 5-year weekly chart, which shows me all the internals here. So I have 1, 2, 3, 4. That's going to be a diagonal, not a diagonal, just a triangle pattern for the fourth wave. And then I have 1, 2, 3, 4, and I believe we are finishing up within a diagonal minuet wave five. And so here we have 1, 2. Now I can bring this down. Now let's bring it down here. And now we're inside it. So I have 1, 2. This is actually 3 waves. A, B, C, 3, A, B, C, 4, A, B, C, 5. This is how close I think we are. So what does that then suggest? That the current rally phase and finishing intermediate wave 3 of primary wave 3 is about ready to turn. So I've spoken about this previously. I'm going to speak about it again, that just on a little bit longer basis, we're confronting probably the largest pullback that we would expect that we've seen. Well, let's just take it back out. We've since 2022. So interesting that it could just absolutely smash this thought, and we could see an additional acceleration. Now, I'm going to bring it back down to that daily. I'm going to go back inside. Just normal fibs that we got going on here. I cannot say with any certainty at all that this fifth wave, along with this fifth wave, along with this fifth wave, doesn't just spike again. Now, what can do that? Let's take a look at our geopolitical situations around the globe. If we have a flight to safety, it's going to go back into gold. We're going to see it in gold. We're going to see it in silver. We're going to see it in platinum. Based on what I've just talked about, right? China's not the only one doing it. I think there are several countries that are doing it. I would say that Russia's likely doing it. I think that India is doing it. I think there are other major, maybe the Central European Bank could be doing it. Individual countries. So there's a lot of interest in stockpiling the gold, silver, and platinum. So what happens if currently we've got a really hotbed going on in Iran, which could involve Israel and could involve the United States? We have the current administration making some threats against Iran. We now have Iran going back and threatening to hit U.S. bases, military bases in the region, if the U.S. interferes inside Iran with the current protests that are going on in Iran. I don't normally talk about geopolitical things, but this is one. And we already know that gold, when it comes to uncertainty, whether it's economic or whether it could be geopolitical, they don't like it. So it's already built up where we've recovered again off of a downslide, off of these raised in margin requirements as that continues to go up, and it doesn't seem to stop it. We do these pullbacks. Sometimes they're big, sometimes they're small, but we do a pullback and then we rally again. And so I am thinking that with this rally, obviously should continue. If we're in this fifth wave, and that's A, that's the B, small b, we get a C wave, my minimum is 46.50. That's where this fifth wave would be equal to, no, inside. It would be inside. That's where the C wave would be equal to the A wave, right? Remember, everything's going to be in threes. So in ABC. So there we have this little ABC. 46.50 is where C equals A. 47.96 or 4,800 is where wave C would be 1.618 times the length of wave A. Now we're coming out here. Minuet wave 5 would equal 4.236 times the length of minuet wave 1 at 49.08. A real spike, a real danger if one of these hotbeds that we got going on suddenly explodes. 5,000 is not out of the picture. It has been a long-term uh, resistance area, a long-term goal for gold prices, and that's 5,000. So that's what and I'm leaving it bare as sitting there. We have additional way up, right? Just to show you. Because again, when I'm using Fibonacci, we have, we have 0.236, 0.382, 0.5, 0.618, 0.764 or 786, whichever one you use, 100%, 1.618, 2, and then we have to do the multiples, right? So that's what we do. How do we get those next levels up? We multiply the current by the previous. So if I have 1.618 times 100, it's 2.618. And then if we multiply 2.618 by 1.618, it comes out to 4. Well, actually, it's a level that I'm not really up, but it's 4.236. And then we multiply again and we get 6.854 or 685.4. And then if I multiply those two, I get 1108.9. Those are gigantic numbers, but they're real and they're applicable. And that's what I'm using to show you if we really get explosive in gold, again, short squeeze, again, the availability of gold could just shrink, which is going to put upside pressure on prices. So there's so many things that can start to happen here that could accelerate this. Am I thinking 57? No. Not off the top of my no. I wouldn't go that far. But I can see from current levels, we just go. We saw a lot. We saw it here where we just kind of went and we got up to 40, almost 4,500. And then we saw here where it got above 4,500. Then they came out with that margin requirement raise, and that kind of buttoned it out. But now we're back above 4,500. So we just need to get above 4,571 towards 4,600. So it's not that far of a stretch to 4,650. Now, whether that contains it's going to be like, well, what's going on around it? That's going to be what's important. What's going on around it? So don't forget that there are the physical need for gold is going to get squeezed. And it can be getting squeezed because of GLD. That's where the options are trading. And so there gets to be a problem. It's like, okay, is there enough gold to cover all the contracts that are going to be that could be asked for through settlement? It's it could be wild. So again, it can just perpetuate itself until we finally peak and something can calm it down, and then we start to pull back. I think that it could. Well, 4650 to 4800, I think is pretty easy to get to and could get there very quickly as something on the global stage and the geopolitical accelerates very fast. So in other words, it's like it's almost unexpected. If the US makes an attempt to go in and do something in Iran, it's it's I don't know, I can't put it into words. I think it could be very, very serious. And it's just something that's like, no, you don't get to do that. You don't get to internationally decide we're the dominant partner and we can do whatever we want. You don't get to do that. By doing that, you could get serious retribution. So, and there's so many other geopolitical situations. The two other that are brewing and red hot, in my view, are Russia, Ukraine, and China, Taiwan. So now we've added the third, which is Iran, US. So a lot going on that could really upset this apple cart and drive the prices higher. Elliott wave wise, I think we still need a fifth wave up to put this fifth wave in. But again, this is what the Elliott would tell me. And this is what's going to be very, very interesting because if there's something going on in the geopolitical, this could extend. It could extend easily. Then, the account could be we stay in this fifth wave and it just goes and goes and goes until we're like up here, which would be pretty stunning to me. Otherwise, if things stay cool or cool down or slow down and maybe shift, even if it shifts to the economy, I mean, that throws an uncertainty. And if the dollar starts to go, this should rise. This should rise. In fact, it's rising even with the dollar increasing. So yeah, we're in strange position. There's too much being verbalized, and now if any action takes place, I think we could be explosive here. So again, 4650, 4800, 4900, and 5000. All. I'm leaving them there because I don't think those are unrealistic if something serious happens globally. And it could get there really fast. Now, what happens when it does? Well, it would put in this subminuet fifth wave. It would put in the minuet fifth wave. It would put in the minute fifth wave. I'm going to keep going out. It would put in the minute fifth wave. It would put in the minor fifth wave. One more. And it would put in the intermediate third. So what then, Michael? Well, we'd be looking for a fourth wave pullback, a fourth wave correction. Where do our fibs come in? Well, we'd go from there to that low, the low of intermediate wave 2, to the high of intermediate wave 3 to get our fibs for intermediate wave 4 coming down. Right off the bat, and this, as I've said before, I would not necessarily expect it to come down that far, even close to coming down that far. Why? Because wave 4 would overlap wave 1. That's the first big thing, right? Because what do we have? Elliott tells us that a fourth wave in progress or underway should find its terminus or its endpoint within the fourth wave of one lesser degree. Well, here we are dealing with it's the fifth wave that expands. It's the fifth wave that just jumps to the moon here. So that fourth wave is the minor fourth wave, and this is where it's sitting at 1600. Well, wave 1 topped at 1923. So again, doesn't come down that far. Wave four would overlap wave one, nullifying the whole thing. So it really brings us back into the picture we got here, 32, 33. That I do think is possible. It's a fourth wave. Again, this is me stepping in with my experience with Elliott wave. What am I going to look for? I believe fourth waves working its way lower are what we focus on. Those are going to be the support levels for any decline, whether it's in equities, whether it's in precious metals, whether it's in the bond. I'm constantly going to be looking to the fourth. And there's one, there's one, there's one, there's one. For gold to make that kind of a decline all the way back to here, well, a lot of things got to be resolved. A lot of things have to be resolved to have a drop, and it would be years. It would be years, and it would change the overall count. If it came down that far, it would change the count. Because I couldn't keep it as an intermediate wave four, I'd have an overlap wave one, not on this degree, not on how this is coming through. So it would have to change. But I'm going to go look as well, just in previously, where did we find our support? And I think it can come down. So once we get that top in, we'll put the fibs together and see how they line up. And again, we'll see how is the market doing and what's happening all around us. That's the big thing for me. I need to really match this out because gold is a storehouse of value. Gold in times of uncertainty holds strong. Demand is high. So we'll see. We'll see how all this plays out. But I do believe we're getting up to a point, whether it's going to be 46, 48, 49, or 5,000. I believe we're getting up to a level that should complete all the way up to intermediate wave three. And we'll see how this does work after that. I got to take this one step at a time. I really do. So, in terms of investment, as a gold bug, I have found that it's always prudent to have gold in portfolio. And so I stick to that. But is it time to take some off? I could see that. But again, if you're more of a swing trader, if you're just position trading it and you're looking for this move and you want to take profit, something inside of me says I'm always going to want to keep some position in gold because we are living in truly uncertain times. Now, gold could turn and drop like a stone, and so can everything else drop like a stone. And if it got severe enough, as it did in 1929, 1932, etc., well, then you want to have gold. Why? Because if it got down to where the dollar was of no value, I'm not saying we're headed there. Please, dear God, I'm not saying we're heading there. But that's how gold remains to be a storehouse of value. That's what it means. So I just think it's worth holding some through the good times and the bad times. You hold it. But in this particular case, I think as a trader, yes, if I have long positions, I'm looking to take some off up here because I would be looking for a larger correction. So I don't necessarily need to have as big of a position. That's just me. Again, folks, I do not make trade recommendations. I'm telling you what I would do. Big difference. Each one of us gets to make our own decisions. So that's kind of gold. The other one, which has been dynamic beyond words in my book, is silver. Now, silver as well, I'm going to start out here. The way I'm counting it is W, X, Y. And look at the stem. Look at the stem of this Y. Utterly dynamic. Previous high was 50.50 in 1980. We've taken that and tossed it aside by far. By far. We've been as high as 82.67. Now, if this count is correct, which just by the way it looks, I'm like, man, I think it is. The only other thing that I could say, again, is X, and you've got this bigger ABC, or somehow, again, I don't know what I would call this coming down. If this is going to be an A and this is a B, and this is a C wave going up, and there would be 1, 2, 3. So we're still confronting the same thing, right? We're confronting a larger correction before we turn and run again to the upside. So here's what I have. Now I'm going to bring this down and let's look at that 5-year, right? Because what do we have coming in? There's the B wave, A, B. The other alternate could be 1, 2, intermediate, 1, intermediate, 2. So what could we be finishing here? Same as in gold, right? An intermediate third wave. In this case, I'm considering it a C wave. Now, an intermediate C wave will consist of 5 waves of minute degree, of which minor degree, of which we have 1, 2, 3, and 4 in place. Now, silver has attracted a lot of attention. Silver is the reason the CME is very nervous and now raising and raising and raising the margin requirement to trade this product and to trade options. So let's see what I just, these are in all caps. This is our president, folks. Cuba should make a deal before it's too late. Let's see what this does and how do we want to take that, right? How do we want to react to that? Threaten, 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 threaten. How do we want to react to that? We'll see. So 1, 2, 3, 4, we're in that minor fifth wave going up, and it is dynamic, and it is true in the precious metals. It's the strongest. It's the longest, and it's the strongest. Where are we inside that 1, 2, 3, 4? And the minutes are in minute wave 5. I'm going to bring it down. Let's stick it on the daily. Now we are. Here we are minor 5. Here we are minute 5. Here we are in minuet 5. And we're inside. 1, 2. So we still have a dynamic sub-minuet third wave, and then a fourth wave, and then a fifth wave. So essentially it's like, okay, what am I saying? Where can silver go? Well, here's that big box, that big part of this, all of these resistance zones that are connected to the Y wave, that's the green, the C wave or the third wave, that's the yellow. The orangish color, gold color, that's the minor. The white, that's the minute. And the purpley one is the minuet. And then I have just this third. So in essence, here's what we got. The sub-minuet is the one I'm going to watch. 3, 4, 5 is what I need. Once I get that done, that fifth wave, the sub-minuet fifth wave, once it's complete, will have finished sub-minuet wave 5 minuet wave 5, minute wave 5, minor wave 5, intermediate wave C, or intermediate wave 3. All done. Then we are due for a larger correction back. Now here, a little bit different. Taking this, let me just put this back together if I can. We have that. Let me take it back out to the 3-year. We have that. So if we come back to that fourth wave, I want to take it back out. And on this one, oh boy, I got to go all the way back out. Here, it's a little bit different because if I'm finishing a C wave and we were to come down to that fourth wave, it can overlap. It can overlap without a problem. Now, there are Elliott wave analysts that talk about that these are just normal occurrences and that usually the precious metals can rally hard, they peak, they drop. So we have a bull market and then it reverses and we go into a bear market and it's reversed again and with another bull market. So we have some that are just keeping into that classification. And I think that's okay because it is exactly what happens. Bull market, bear market, bull market, bear market, bull market. We should have a bear market. How deep will it go? Well, there are different ways we can calculate that with fibs. And we could say, oh, maybe it can come back all the way there. That's 27. But again, my plan has always been, and I'm going to stick with it, is that I'm going to go following the fourths, of which I don't have the last one up here in terms of this sub-minuet 3, and then a 4, and then a 5. So that would be the first 4 that I'd look at for support. And it's very high level support. Then I got that one. Then I have this fourth at 68. Then I have this fourth at 45 and a half. Then I have this 4 at 27.60. Can I get back there? Sure. Why? That's the bulk of this whole ride higher. Has been happening since April the 7th of 2025. We have seen silver prices basically quadruple, right? 3.5%. Or just it's like not even 3.5, 350%. So to get, because we're trading, we're just below 80, we've traded as high as 82, almost 83. That low is 27.50. It's like pretty crazy, huh? Let me get this actually straightened out because that comes down to there. And this comes down to here. So it does change a little bit that level. Not by much. Puts it at 88. So that's what we're looking at once we're all done. And I think silver, look at that. That was the first little, oh, we raised the margin requirement. Get out. And it dropped. Massive. And on that same day, the same session, it ran up to 82.50 and then it dropped to 69 and change. And look what it's done since. It's rallying back. It's gotten to 82.94, finishing out that week, last week, at just below 80. I think we can go again. 1, 2. We go again. Coming down. Let's go look at the daily. What's the daily look like? 1, 2. There we are, picking up the rally again. Any type of uncertainty. This is where this drives me crazy. It's all because of the contracts. You got to go. I move it on one, and then I switch the chart, and I got to move it back time frame on the chart. So we're back up at 89. Okay, so where can this go? I'm going to start to pull this down and see if we can take a look. We have a 3, a 4, and a 5. Okay, so 1, 2 down. What should that 3 look like? Well, I got 86, 84. Even a little bit more. Go to 87. Good enough. Go to 88. Good enough. This fifth wave, right? So we got the minuet. So that's the sub-minuet 3. maybe 86, 87. We come back in a 4, we go back up in a 5, and then I'll have additional, but that would include now we're up to this level. I leave that 83.49 there because it hasn't reached it yet. But as you can see, even within the context of this wave, that's not going to finish it. That's not going to finish it because this is not going to be done. So it's going to be this sub-minuet fifth or 5 waves up that are going to then in turn finish. That fifth wave will finish this fifth wave, this fifth wave, that fifth wave, and up to what else we're considering on the intermediate degree. And actually, it could go all the way up to that primary degree because we can finish that primary Y. We can do that. So, but another way of counting it, like I said, was if it's not going to be the Y and it's just going to be 5 ways up in the intermediate degree to finish whatever it is on the primary degree, well, then we can go much higher. We pull back in an intermediate fourth wave, and then we go running back up in an intermediate fifth wave, and boy, are we looking. We got it all up there. That could be the C wave or third wave. 96. That's pretty high. That's just below 100. Now, I want to make it clear. I'm not saying that that's where the market's going to go. I'm saying that analytically and on a Fibonacci basis, yeah, that's where the numbers tell us. So what the numbers tell us and what the wave count allows is for that level. Now, how's it going to happen? Well, it's like, how are we ever going to get to 86 or 82? And we did. In fact, we got to 82 after they announced that they're raising the margin requirement. So it was the shorts that moved in first to get out. We're just getting out. Once they were done, the longs were left that they either had to get out of, adjust the positions, or they had to get out of them or pay way more. So then that happened. Took a couple days, and then we rallied back. So again, silver is still in demand. Hands down, it's in demand. Now, I guarantee that some of what's happening is due to SLV and options trading. So once again, we have volatility triggers, gamma levels. They're applicable here as much as they're applicable in other markets. Gamma and what it does, and volatility and what it does exist in silver. Volatility, of course, exists in silver. And you can measure it in silver. I can't pull it up because I don't have that symbol, but it is available. So again, these things do exist. This is a technical picture. I believe there is still additional upside to go. There are various reasons as to why. We talked about the investment side of how we know that China, hopefully the United States, India, other countries that use silver for industrial use are going to be out there taking it. Because as a producer, you need to go and cover yourself for what your needs are going to be for your production for 2026. So maybe they did some of that. Now they're doing more of it. Maybe they got to figure it out. So we have that. Besides investment, investment is huge. Besides investment, we have other numbers that people want to come in with. Gold silver ratio. Big. That's told us over the years, blah, blah, blah. And it's true, it has, just like the fibs do, just like the Elliott wave does. It's a technical analysis. And so they do come in. And they do get adjusted. Those levels get adjusted. And they're being done by other big firms that or traders that they feel, okay, that's an opportunity. So again, you put your trades out, you do your stuff. So all of these things combined give us the market that we have. So again, on a geopolitical front, if people are buying silver for the same reason that they're going to want to hold gold, well, then silver can go to 96 if that fire gets hot enough on the geopolitical level. If the uncertainty, if the discourse around the world gets big enough, I can see these things happening. I can see gold 5,000 rather quickly, by the way. We just talked about it. Same thing here. Could we see 96 to 100? Yeah, I think we can. Look how fast. This is April of 2025. This is January. This is the end of December 2025. That's huge. So yeah, it can go another $26, $30. Actually, here it'd be 20. $16 and $20, it's at 100. So yes, it can happen. So that's kind of my picture in silver right now, backed up with a little bit of the other stuff that I was pulling out. Now, downside, until we break this, which we haven't, we can also say that we're going to pull back and we get back down to 69. That's the alternate. I know, right? It's like, what? Okay, that's the alternate. And why would it be the alternate? See, we have A, B, and then we have a C wave coming down. This is kind of crazy, so it takes part of it away, but it still can be out there until we break back above that level. And that would include to getting us up to here. Then it becomes 1, 2, 3, 4, 5. But until then, it could be big ABC flat. This is weird because it does kind of come down in 3. That's why I put a 2 there. But I'm not going to toss it out to say, it can't. The alternate is that it could and come back down to 69. Okay, that's the alternate. And I'm going to keep it as an alternate. All right, let's go and take a look at platinum. Platinum has been also, I got to move it all the way out to here at first. Look at this wave. Now, last time I talked, so I know, and I apologize that this is 2 weeks, and I apologize for that. But platinum, we're looking for this primary B wave. But it went, in the process, it went to new all-time highs for the chart. I don't have enough data that could tell me that the platinum is traded above 2,584. On my chart, it has, from where I've marked primary wave 5. So this is primary wave A coming down, ABC, primary wave A. That leaves open a flat to an irregular B wave, right? Wave A was 3. Okay, so where does that come in? The first marker for the irregular B wave is 2721. The second one is 2977. Now, I got one little resistance point on a fib level at 2721. I have 1, 2, 3, 4 up here, and that's on intermediate, minor, and I don't have, yeah, and on the minute. So let's start to pull this apart just a little bit. We're going to go right into here. We're in the C wave. We're in intermediate wave C, a primary wave B, already looking. We're going to go, it should go to an irregular. The way that this is kind of counting out right now, that we kind of went up, We made that new high. We came back down, and look at that. We've already been back above almost 2,500. This high is 2,584. So I think 2,600 to 2,721 should be a breeze. Should be, he says. And I'm not trying to be arrogant or silly. I think it should be easy. We again reviewed that we have large investors coming in to platinum. We don't necessarily have any thoughts. We've had other reports, again, not backed by any official data coming from China, that they have for investment purposes, they're moving into platinum. So investment purposes, are they trying to back their currency? Maybe. Are they trying to back other virtual things that they are trying to put into place? Maybe. We don't have any proof because they're not saying. But we know that industrial use is big for platinum. It's needed in several industries within China. Remember, it was China that came out and said, we don't think that our own, don't be, and referring to the chip makers in China, don't buy these chips from NVIDIA. Buy them from internally, what we have here. We're like, that's interesting. So here we have it. And again, that could make platinum because platinum is used in chips. Okay, so we have that. I'm going to pull this down. This I find interesting because it's very difficult for me to kind of, I don't know, where am I going to go to? My weekly, and even if I go to my monthly, it still get all bunched up there. So we have 2947, 2977, 2982, and I got another one up in there right there, 2986. So all within between 2950 and 2990. I have all of it. Huge cluster of resistance for an irregular B wave. So when I get that, I'm like, wow, all the way up, all the way up. It all's coming in there. I'm like, okay, that's the big candidate. That the platinum prices are likely going to get above 2,900. But let's not forget that what I got, the smallest wave that I'm counting here is the minute fifth. So once this minute fifth gets up there and completes, it's going to take all of the rest of it with it in terms of completing. So that's going to be minute fifth, the minor fifth, the intermediate C, and the primary B. But there's still more to come. And believe me, we're at 20, where are we? 2277, we're talking 29. It's just $700. And look at this one. This all happened in a month. It went from 1623 to 2584. So to say that it can't happen, it did. And I can do it again. Doesn't even have to be that big, right? That was the third. The fifth can be extended for sure. But that so far we're at 2070. So it's only $900 all the way up, a little bit less. Okay, so that's our pictures. Kind of dynamic. Now, again, what's my alternate? That we get to that top, something comes somewhere that changes the tone. Resolution of conflict would be big. Industrial use, something that could turn it. It's how it could be interesting. I'm not sure what it would be. So we have to think of what the factors are that are continuing to support the higher prices. So if any of that changes dramatically to the improved side, any of these hot spots that we have all get resolved. God bless it. then all of that weight comes off that you need to hold this for that reason. And boom, maybe we can come down. So we'd be looking for, once we finish this primary B wave, I'm looking for a primary C wave all the way back down. How how easy that's going to be, I think is going to be very interesting now because we're finding out all these uses and storage and buildups of stockpile that's likely happen. So we're going to take this point by point, to be honest with you. But on an Elliott basis, I think we're getting close, as with the others, that we should have a little bit larger of a pullback. Okay, that's where I'm going to finish. Thank you for listening. Thank you for viewing my work. Please leave comments if you have questions or you've got your own thoughts on what you think is going on. Share is great, but let's make intelligent points, please. These are big trades, and I'm going to leave it there. And the next update will be, keep your fingers crossed, next week.